Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of November 25th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage, here to give you your update. Last week we saw mortgage rates actually spiked higher after the Federal Reserve Committee minutes were released and renewed fears of tapering came into the picture. So we did see Delaware mortgage rates move higher last week. If you look at the bond chart on the screen, you can see we had a red candle down on Tuesday, which was the bond hit the 200-day moving average, was turned lower. So we saw a slight uptick in the rates, but the big red candle down on Wednesday, that's when the Federal Reserve minutes were released. Bonds sold off on fears of tapering this year versus next year. And then you can see at the end of the week with the green candles, we were actually able to hammer out a bottom and recover a little bit. So with that in mind, we are going to recommend floating your Delaware mortgage rate to start the week to see if the bonds can continue on their stabilization, maybe recover and move higher. So we dig into what happened last week. The Federal Open Market Committee released their meeting minutes on Wednesday. And in the meeting, they did discuss tapering the asset purchase program called QE3. Currently, they're buying $85 billion every single month of mortgage bonds and treasuries. And there was talks about tapering that back. So that puts a lot of uncertainty back into the market because the market has been pricing in that they're not going to do anything until March of 2014. I still believe they're not going to do anything until March 2014. But the uncertainty that came out of the meeting minutes rattled the market. We saw the sell-off, but we have seen a recovery a little bit since. So that's why we are recommending floating. Now, in economic news, the U.S. Labor Department reported the weekly initial jobless claims on Thursday at 323,000 claims, which is a drop of 21,000 claims from the previous week. This was the lowest drop in claims in nearly 3 months. But the Veterans Day holiday probably had something to do with that, so we're going to have to see this week. We were expecting claims to rise again this week. So be on the lookout for that. Then we saw retail sales rose unexpectedly 0.4% in October 2013. And now the increase was probably due to the drop in energy prices. So if consumers are spending less money at the pumps, they can spend more money on clothing and electronics. And we saw the drop in energy prices when we saw the measure of inflation with the Consumer Price Index, the CPI. Came in very tame at 0.1%, which was below expectation. And again, that was the result of the dropping energy prices. And the CPI measures inflation at the retail level, what's going on in consumers. Then we saw the stock markets had a huge week last week. Again, 2 all-time record highs set. The S&P 500 closed above 1,800 for the first time ever. And the Dow Jones Industrial Average closed above 16,000 for the first time ever. So 2 big moves in the stock market. And what's pushing the stock market higher is the Fed's continuing this QE3 asset purchase program, pumping up the economy. Stock markets are rallying on that. So be careful for your stock portfolio. When the Feds get closer to start tapering the asset purchase program, you could see the stock sell-off pull back. So you may want to move out to the sideline before the tapering starts so you don't get hit to your portfolio. In housing news, we saw October 2013 existing home sales fell 3.2% due to the rising home prices and rising home loan interest rates. Expectations were for 5.2 million homes to be sold on an annualized basis, and we only got 5.12 million homes sold. That marks the second straight month of existing home sales declining. Now, upcoming this week, we've got pending home sales for October 2013 coming out this week. We've also got the Case-Shiller Home Price Index, so we can see how home prices are stacking up. And then we have 2 reads on new construction to see how the home builders are doing. We got building permits for October 2013, and we've got housing starts for October 2013. So that'll give us a good read on how builders are faring with these higher rates and increased home prices. Now, in the local news, the next free first-time homebuyer seminar is in Newark, Delaware at the Christiana Hilton Hotel. That is Saturday, December 14th from 10 a.m. to noon at the Christiana Hilton Hotel. And then the next one in Dover is Saturday, January 11th from 10 a.m. to noon. That's at the Dover Holiday Inn right there on Route 13. Now, you can register for either one of those events by giving us a call in the office at 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.